Okay, folks, we are live and welcome to Sunday Night Futures Live. So, before we begin, I've been meaning to do this, but I've been wearing heavy shirts lately. But one of our great members, Talon, sent me over this jacket. It is, what is it? Eddie Bauer, right? I think so. Eddie Bauer, yeah. The Contrarian Trader. So awesome jacket. Thank you very much. I'll probably have to take this off in a minute because I'm hot. But thank you very much, Tal. Much appreciated. And sorry for the belated thank you. So, okay. A bit of news was announced today, or maybe yesterday, and it got disseminated out today about an authorization by our fearless current president, Joe Biden, to authorize the use of long-range missiles into the heart of Russia. We're going to be talking about that tonight, and it's hardly trending on Twitter, X, whatever you call it, and people are paying attention to the NFL, and they're not considering this whatsoever when they should be. We will be talking about it tonight and what it means for the market. We're going to be talking about last week a little bit in terms of what's going on. You're seeing a lot of sector rotation. We spoke about this on Thursday night. Defense, pharma, food products, staples, all got destroyed on Friday. So we need to avoid these sectors. Do I think there's opportunity in them? Yes, some. In particular, Boeing. We'll talk about that stock in a little while. But let's first get to the futures action, and let's talk about the opening price action here. And I'm going to ask everybody to get that like, subscribe. You know the deal. Helps me out the YouTube algorithm. And let's get to, let me share my screen. Let's get to the opening futures action. Okay. So let's flip this around. There we go. All right. So what you're looking at here is the opening price action on the E-minis. At current, we are up at current. We were lower, but we're coming back some. We had a good close on Friday after what was a very bad day. So you had a little bit of short covering rally into the close. I think that's going to continue into this week. And I'll talk to you about the whys behind that in a moment. Let me bring up, I'm trying to get the earnings reports up here, then we'll continue on with, okay, I have them here now. Okay, so let's continue on. Let's go on to the NASDAQ 100, the triple Qs of the futures market, a bullish reversal bar. This is a 30-minute chart. Let's go to a 5-minute. So it looks as though we're going to get a lift here this evening. Let's see if we start putting in higher highs. We'll create an alert. Moving on to the Russell 2000. They're up as well, off the session lows. NQ, NASDAQ 100 just made new session higher highs. That was a pretty tight alert, so no great shock there. This is the NQ. You have resistance right here. Expect a breakout, and then a pullback and a retest. I'm not going to stare at this. I just want to really know if we put in new lower lows. Let's check out the YM. This is the Dow Jones Industrial Average. and we're up fractionally. Let's create an alert here. Let's keep it a little bit looser than we did on the NASDAQ. Okay. And of course, we want to know if we take out session lows as well. Now, the driver of this market right now is yields. So we need to take a look at what bond yields are doing. And we're going to go over a monthly chart of the 10-year yield in a few minutes, because we're at an interesting resistance level on the 10-year. Now, if this resistance level gets broken through, this market's in a whole lot of trouble. But it's important to remember where we're at. You know, on a weekly chart, and I discussed this with members over the weekend, we had a breakout. The however is that when you take a look at a monthly chart, there's a upper band of resistance. We're right at it. So the question is, do we break out or do we break down? We don't know. And if we do break out, look out below for the rest of this market, because it's going to be a major, major problem, in particular for the small caps and mid caps. So yields at current, they're up relative to the close of Friday. They're down relative to the after hours high from Friday. Frankly, I didn't even know they had an after hours on a Friday, but okay. Let's take a look at the US dollar. The dollar has been on a tear of late. The dollar is up relative to the close on Friday. We did proceed a lot higher after the close on Friday, yet we pulled back. Let's see whether or not we get higher highs here. Now, looking at the gold market, we bought a little bit of gold last Thursday. It's only a one lot contract, not a big position. And we're doing okay with it. We bought it down here, as a matter of fact. It hit this rut, just took out highs, the Russell 2000. We bought gold down here. We were tracking it, was very disciplined. We waited for this resist or support level to get touched. It got touched. We saw the breakout, and then we bought that. Looks like we're going to be putting in higher highs on gold. Good stuff. Nice. I haven't spoken bullishly about gold in a while. So it's good to be back in the bull camp on gold for the time being. Do I think that the damage is done here, in particular on the gold mining stocks? Probably not. But it's good to see we're beginning to build a base on gold. I have no comments. Is the comment section working? I don't think that's ever been the case. Ever. I think people are pissed at me. Is the audio okay? I got to check this. This is an anomaly. Yeah, something's wrong here. Yeah, I got plenty of comments on YouTube, but I have no comments in my platform. Normally they'd be right here. And it's only showing 11 viewers, but they're on YouTube. It's showing at current 31 at current. So weird. Sorry if I ignored people. I didn't see your notes. Talon, welcome. I don't know. I can't pop up the comments on the screen. Sorry about that. Pete, Mr. Pete, welcome. TF Hatter, welcome. Tim, let's get to it. All right. William, welcome. Dare, what about interest rates? We spoke about interest rates already. We're going to be talking more about interest rates in a little while. They matter quite a bit. It's the inflection point for this market, have no doubt about it. TF Hatter did really good on LABD on Friday. You should have that would have been a great trade. That was the worst day for LABU I'd seen in a long time. Franklin, welcome. Tom Liu. Bob, if this is a managed environment, nothing to worry about. A balanced portfolio is recommended. Fair. Trader Isaac, welcome. Hello, Bob. I see Tesla news on easing autonomous vehicle regulations from the great POTUS-elect administration. Yeah, he's going to get paid back in spades. Tim, welcome. Audio is good. Thank you. Yeah, thanks. Thank you for that. I see a lot of comments here. Corey, welcome. I'm not sure what happened with that software. That's really, really weird. But we'll get through. We figured it out. Corey, welcome. Thank you, sir, for the audio check. Polish Taco, I got your request. Welcome. Seymour Rivers, thank you, sir. Michael Matthews, audio is good. Thank you. Appreciate it. Trader Isaac. I couldn't see the comments on MacBook, but I could see them. Interesting. Okay, thank you for that. All right, so there's a glitch in the matrix somewhere. All right, so we're now up to 35 people on. What is it showing on that software? Still 11. Something's wrong. Nope, not at all. And it doesn't look like I'm sharing my screen anymore. Okay, let's get back to the futures. So gold looking really good here at the open. Very, very strong, up now nearly a quarter percentage point. Bitcoin had a rough day today, and it's still happening. Down 2,200 the coin. That's a big move, but only 2.4%. So context matters, I guess. Context matters. Let's check in with silver. Silver holding up. Back to the 5-minute chart. Looking good. What else we want to talk about here? Agriculture, soybeans down. Let's go to the weekly chart, see how they closed out the week. Not good. Outside reversal bar. Corn, a down week last week, but not horrible. Wheat, not a good week last week. So ag under pressure. Okay. Now, when I went live, I had a couple of alerts fire off on crude. And it gapped lower here at the open. Now, this is the reason why I can't buy energy stocks. Energy stocks did okay last week. They finished out the week up on the week. The problem is that they're highly correlated to oil. So if oil is going to go down, how much more upside is in there for the energy stocks? I can't figure that one out. And also the price of oil, and this is the reason why it's so important to pay attention to price, is that I got to check my audio is off here. I'm going to fix it now. If somebody can give me another audio check, I just switched mics to my Yeti, which is a far better. I don't know how I got off on this webcam. Something's really off tonight with the technology here. My producer, I'm going to fire. Unfortunately, that's me. All right, so crude oil taking a bath. This is a weekly chart. New lower lows already. Let's go to a 5-minute view. They may have just blown out stops here. Maybe they could take this up. Yeah, I don't know. I'll tell you, if they take oil above 67.28 the barrel, I'm a buyer. Because if they do take it up, it'll be because they just blew out all the stops and you're going to have money rushing in here. My guess is they could be doing that. This should be an undercut double bottom on crude oil. Let's give this a little bit of room. It disappeared. Let's try that again. Okay. Let's try that again. Where's my alert button? Okay. Okay. I can't make alerts anymore. All right, great. Thank you, Thinkorswim. Okay. Moving on. All right, let's check in with Natty Gas. We have a position on Nat Gas. Whoa! Nice open here. Nice start to the new week with natural gas up nearly 4.75%. Now we're long of Boyle, which is a leveraged product. So if we open tomorrow where we're at right now, we'll be up around almost 16%. So nice. Now I just did a faux pas. I should not have counted my chickens before they hatched. And that means we'll probably get a pullback. Do not chase this rally on Natty Gas. Wait till tomorrow. Make sure we hold the gains. Live cattle, they broke down last week. We were expecting this. I said if there's going to be a new presidency with a President Trump, short cattle. Sure enough, it's broken down. And last week, new lower lows. If Harris would have gotten in office, the cattle count would have gone down and the price would have gone up. That's just the way they wanted it. So that's the market that we have as we proceed into the new trading week. We have gold and silver catching a bid. Oil that may be looking for a liquidity hunt, trying to take out stops, looking to take it up higher. Unfortunately, I don't have an alert set there. Maybe I'll get lucky later on. I'll check back in and I'll see them take out that resistance level. I want them to. We have yields. Yields are up, but they're off session highs. This is pretty bullish. It's a weekly view. Here's a 30-minute view. Yields are strong, folks. Bitcoin down 2.27%. For those folks looking to buy Coinbase, tomorrow may be your opportunity because it's highly correlated to the price of Bitcoin. Let's just do a real quick pulse check on the NASDAQ 100. What's it doing? Not much here. It's up. It's holding gains. Okay, so here's what I mentioned before. That we were going to break out. They were going to pull it back and retest it. My guess is we have yet to retest it. Right here, they got my alerts back. I want to go back to oil. I want to set up that alert. All right. I think they may rally oil. There's something called a liquidity hunt, and that's when the big players, they want to take up a big position, but they can't do it at the market. They need to take out a lot of stops, create liquidity, and then they buy it up. That's why a lot of times you'll see a stock or commodity break through heavy support levels and all of a sudden reverse. And everybody that had a stop loss and saying, what the heck just happened here? The shares, I got stopped out. Now the stock or commodities trading 2-3% higher than where I got stopped out at. So that's a liquidity hunt. That's why I hate stop loss orders or static stop loss orders. Okay, let's move on. Let's talk about TrendSpider. Folks, they have a was it 71% discount? Make sure you get your discounted version. And this is running out. I think this ends today. Today's the 17th, right? Yes, ends today. 18th, it goes down to only a 67% savings. Now, keep in mind that this is for a year. This savings is for a year. If you want a discounted version of TrendSpider, I give it away free to our silver and gold level members. That price never changes. I'll be going over a demonstration of TrendSpider in a little while. And the version I give away free is the version I use. So, and it's plenty good for me. So take advantage of it. Link below on YouTube, link above on Twitter, automated technical analysis, charting, back testing. I mean, so much stuff here. Go over, take a tour. If it's for you, great. I use it. I swear by it. I give it away free. It's part of my business. So, you know, I believe in it. Okay, let's talk about economic data coming out this week. Tomorrow, not much. Tuesday, not much. Wednesday, not much. Thursday, not much. So whenever you see all these Fed governors coming out, they're trying to steer a narrative. So, and they'll guide the market where they want them to be, whether it be rate cuts every other meeting or whatever they've decided to do. I don't think they're going to even do that, to be honest with you. So it'll be these guys can move the market this week because there's nothing else guiding the market with the exception of earnings. Now on Thursday, we do get leading economic indicators. That's been pretty strong of late. So that can move the market. Friday, S&P services PMI, we get manufacturing PMI. The thing to remember about these numbers here, for U.S. services, they're not giving us a expectation, but any read that comes out above 50 is a sign of expansion. Same thing holds true for the manufacturing number. The problem is with manufacturing, we've been in contraction for like 2 years now. It's a crazy number, but we've been in contraction for quite a while now. So keep an eye on these numbers. Consumer sentiment, that's the final number. It's not an initial number, but I suspect that in the coming months, especially after President Trump takes office, they are going to revise down a lot of good numbers, and they're going to look really, really bad. That's my take, and they've already begun to do that. Remember that for going back about 2 months ago, they revised down for a 12-month period jobs created by over 800,000. That's just for starters. So the economy is probably on a lot worse footing than what we may currently believe. Now, I mentioned this earlier. You know, these globalists are not going to go easy, folks. You know, after the election was won, you know, I was very, very happy. But being the pragmatist that I am, I try to be anyway, is that, you know, great, enjoy that moment of glory, but the job is only just beginning. And these globalists, they have a lot invested in the New World Order. They have a lot invested. They have a lot to lose. And those that reside in the United States, some of them are going to jail. Some of them are going to prison for a very, very long time. So they'll do anything right now, including World War III, to avoid accountability. And none of these people understand the word accountability as it relates to them. To everybody else, sure, they'll hold them accountable thrice. However, for them, they live above the law. That is their attitude, and they will do anything to maintain that power, including just tear it all down. Burn it all down. I don't care, because I'm going down with the ship. So if they go down, we all go down. That's their attitude. So this so-called president now has authorized the use of long-range missiles into the heart of Russia. Now, they're using as a reason for this the fact that you now have North Korean soldiers that are now fighting on behalf of Russia, fighting against the Ukrainians. So what does that mean? That means that now not only have you set up a tripwire for World War III with the Russians, but you've also set up a tripwire for the North Koreans to attack the South Koreans. And what does that do? That forces the Chinese to make whatever move they want to do, because there's going to be all sorts of confusion. They can attack Taiwan, or they can come in on the part of the North Koreans and attack the South Koreans. So the fact that this is not a greater conversation on X right now is mind-boggling to me. But that's just the way we live, that we have the American laissez-faire type of attitude. We're more concerned about football than we are about long-range missiles going into the heart of Russia. Because one thing to keep in mind is that those long-range missiles are not managed by the Ukrainians. They're managed by computers, automated by us and NATO. So if those missiles get launched into Russia, that's not the Ukrainians attacking Russia. That's NATO attacking Russia. So this is big. This is really, really big. So God help us all. God help us all in the coming days. I just hope that if it's allowed, I don't even know if he's allowed to, President-elect Trump is allowed to make a call over to Zelensky to say, hey, don't even think it. Don't even think it. Alex Jones. World War III alert. Biden officially greenlights the bombing of Russia with long-range missiles by NATO. This is a transparent attempt to escalate the war before Trump takes office. Absolutely right. Let's talk about the markets. That's your geopolitical risk out there. That's why you shouldn't be shocked to see the dollar up and gold up right now, along with silver. Geopolitical risk is now going to come back into the marketplace. It left once you had the cessations of hostility between Iran and Israel. Now it's going to bleed back in. So that small position I have right now in the futures market on gold may become a larger position if this continues to heat up. All right, valuations of the market. We were at about a 38 handle this time last week, a little bit higher than that. We closed out the week last week, still very, very expensive, 37 handle on the S&P 500. Now, the theme of the week is to watch out for interest rates. And you may be saying, the Federal Reserve is in rate cut mode. Are they really? Are they really in rate cut mode? Let's validate that hypothesis for a moment. So last week, midweek, we were at about an 80% probability that we were going to get a rate cut. Before the Fed's last meeting, we were at a 100% probability of a rate cut for as long as the eye could see. Here's December out to January, still high, but this was 100%. March was at 100%, still high at 92, but they could guide this down. May, 93.16. So they're still projecting rate cuts, but not so much for December anymore. It's a coin toss right now on December. Why? Why are interest rates moving higher for the first time in history? Higher after a major rate cut of now 3/4 of a basis point. Now, it's no great shock when you get a rate cut, interest rates will go up higher. That's a relief rally. Everybody knew it was coming. It's a buy bonds news. And then all of a sudden, they come down. Well, it's sell bonds news, and then they come down. That hasn't happened this time. Bonds are getting annihilated. Why? It's simple. M2 money supply. Look no further. So all you need to do is take a look at a Milton Friedman video on YouTube or on X, and he'll talk to you about what inflation is within 30 seconds. Me, I'm more long-winded, but I'll give it to you as Milton Friedman would try to do, but a lot better than me. Government creates inflation. So the more money they have in the system, the greater the probability for inflation. Think about this. We were in a range they broke the back of inflation back here in 1982, 83. Then we went into a trading range by and large. You had a low end of the range, you had a high end of the range. Then it all changed back here. In 2020, they printed 40% in 1 year. 40% of all the dollars in existence were printed in 1 year, creating this spike up higher. And you can see they've taken a lot of it back out of the system, but that ended back here in 2023. What was that? Rate hikes. Now the M2 money supply is grinding back up higher again. What does that beget you? It begets inflation. It begets inflation. What is also driving up the yields or inflation and thus driving up yields? The federal deficit spending. We just hit $36 trillion of debt. And while a lot of people think they are very, very happy that we have a President Trump coming into office, and I am, don't get me wrong, I'm tickled pink. But if anybody thinks he is going to cut a lot of the spending that is going on right now, they're wrong. They're wrong. It's not going to happen. It'll be redirected into other areas. Maybe we're not going to build as many aircraft carriers, but it's going to get spent in other areas, more pragmatic areas, probably more infrastructure, but that's still inflationary. It's still money we don't have. Will there be a return on that investment? You would hope so, but that's down the pike. So what I think is happening here is that, and I've said this many times before, but after last week's price action, I'm more and more convinced of the fact that we're beginning to get a taste of the medicine, and that medicine could be worse than the cure for a period of time. It's going to be great that we eliminate the size of government. What's that going to do? It's going to increase unemployment. It's going to drive down wages, which is actually good for inflation numbers. So down the road, this will all be positive. But right now, the lack of visibility is going to hurt a lot of industry. Food companies are going to get annihilated. Pharma companies got destroyed last week. Defense stocks annihilated. Lockheed Martin, take a look at that chart. You want to buy that stock now? That was a booming stock during the Biden years. Now it's dead money. Boeing stock, which had begun to bottom out, I own it. I'll buy more when I see it bottom out. That's getting its face ripped off. It was up on Friday, though. Thank God for that. So it's going to be a change in the marketplace for a while. So as this number continues to decline down, as expectations for rate cuts move lower, well, it's going to be bad for the equity markets. You're not going to have that wind at the back by the Federal Reserve. You don't fight the Fed, right? That matters when they're cutting rates. It also matters when they're, you know what, I may not be around to help you for a little while. Can't cut rates. So it's going to hurt the equity markets. And they are doing a very, very nice job. I'll give them credit. This is their balance sheet. And this is them rolling off debt off their balance sheet. In fact, I think we're down below 7 trillion. Yeah, we are. Their balance sheet was as high as nearly $9 trillion. They have rolled off about $2 trillion worth of debt off of their balance sheet, which is great stuff. I'm very critical of the Federal Reserve, but this is good stuff. I think it's the right thing to do. But if you're wondering why bond yields are going up higher right now, it's because they're not buying them. And nobody else is stupid enough overseas to go buy more of our 30-year debt. Now, non-farm payrolls, whether or not you believe this number or not, very, very strong. I think that this is going to become a victim of revisions probably before Biden leaves office, but most definitely after Biden leaves office. I think we need to get ready for a revision down on non-farm payrolls. So what's the Federal Reserve fighting here? They know the real numbers here. They know the real numbers. So what kind of position is the Federal Reserve in right now with seeing inflation go up year over year at the core? Year over year, it went up. Last week, up. Yet you have non-farm payrolls being revised down, possibility of initial jobless claims rising. If that happens, that's going to be a big problem for the Federal Reserve. That's not their problem yet. Right now, it's inflation, but it could be, if they revise down these jobs enough, it could be enough for them to say, we have a major, major problem here. What do we do? Do we add to joblessness, or do we fight inflation? I think they're going to let inflation run hot. Here's the unemployment rate. Now, it had been ticking up. It's since pulled back from the August highs, which is why I haven't been talking about it that much. But, still, right now, this is a higher low from prior lows. So historically low unemployment. Watch these initial jobless claims. They've been grinding lower of late, but every once in a while you get a spike up higher. And here's the 5-year view or 10-year view. And you can see we're grinding up higher, but we're pausing here. Bankruptcy filings. U.S. bankruptcies hit the highest level in 14 years. U.S. large bankruptcies hit 570 year to date, the most since 2010. The year of the great financial crisis. What? That's not right. A year after it was actually longer than that. 2007, 2008 was the financial crisis. But I get his drift. In October, September, and August, 60, 59, and 63 filings were reported. So here we're at current. All that matters to me is that on this chart here, we have more bankruptcies already this year with a little more than a month and a half to go, than of all of 2023. And the trend is higher. 2022, 2023 beat 2022. We're already beating 2023. That's a trend. I went over this the other day, but it's worth repeating. Credit card delinquencies, 90 days plus, increasing at multi-year highs. And what are interest rates doing now? Going up, only hurting the situation. U.S. industrial production data. This is why we're talking about the revisions. Watch these revisions, folks. The election's over. U.S. industrial production has been revised downward in 9 out of the last 10 months. So that's a 90% failure rate. I think Elon and Vivek need to visit the Bureau of Labor and Statistics, who I believe put this together, and do some firing over there. Non-farm payrolls data has been revised down 7 out of the last 9 months. We just talked about this. Watch out for the revisions. Job openings have been revised down 15 out of the last 20 months, the most in 15 years. Watch out for the revisions. I'll share this out. I shared it out on YouTube. Can you validate that that got through to you? I'm not using the software anymore. Actually, that looks like it's working again. Kind of. Still don't get comments. Okay. Back to YouTube. Ten-year yield. All right, so we spoke about this earlier, that this is the fly in the ointment. This is the problem for the equity markets. Things aren't working the way they were supposed to. The Federal Reserve was supposed to cut rates, and then long-term rates were supposed to come down as well, thereby stimulating the real estate market, because people don't want to give up those really good rates they had from 5 years ago, 4 years ago, because what are they going to do? Take out a higher interest rate mortgage somewhere else. So they're not going to do that. They're really not going to do it now because we broke out on the week last week. And right now, as I mentioned earlier, we're at the upper band of resistance. We have failed here prior. So I want to say I'm confident that we're going to fail here as well. But the thing that prevents me from doing that is that on a weekly time frame, we had a clean breakout last week, and we closed just off the highs of the week. So that implies to me that we're probably going to get higher highs. Now, do we close out the month at those higher highs? Too much time between now and the end of the month. I don't know. Nobody knows. Now, in terms of the market, last week's sell-off should have been no great shock. We're short the market. We shorted, I did a video mid last week. We're shorting Microsoft and we're short the market, the triple Qs anyway. Now, one of the reasons is complacency. Everybody got all too excited about the change in government. And don't get me wrong, I love the fact that he won. I love the potential change that's coming down the pike. That being said, there are a lot of skeletons in the closet in the Bureau of Labor and Statistics that are going to have to get let out vis-a-vis revisions. What is the real condition of this economy? And when you take a look at this chart here, this is the put-call ratio. And we broke down to extreme levels last week, and ultimately we reversed to close up on the week. So we had way too much bullish optimism, and that ended on Friday. Can we see a continuation move up higher here or a move lower on the equity markets? Absolutely. Because don't forget what happens this week. This week we get retail numbers coming out on Tuesday, Walmart, Lowe's, Target on Wednesday, TJ Maxx, that's a smaller player. But the Pimp Mac Daddy of them all, in terms of earnings, NVIDIA. NVIDIA reports on Wednesday. You get Snowflake that comes out, Palo Alto Network, but I have no doubt about it, NVIDIA is the Pimp Mac Daddy. Everybody's going to be waiting for that earnings report. And my guess is that what they're going to do is they're going to limp this market back up. And then we see whether or not we put in a lower high. And then I'll probably be adding to shorts on a rally up and into a resistance level. So members expect more shorting as we proceed into next week if the price action and the tape is just telling me it doesn't look good. So expect more shorting. I think that its volatility is going to come back in a very, very big way. And add to that the fact that this is from JC Peretz. He did a little bit of work for me. S&P 500. Here are your advancers versus decliners. The month of November has not been confirmed with a higher number of advancers relative to decliners. That's a problem, a major problem. That means that there's too few stocks that were driving this market up higher. That's coming to an end. So buckle up. This is not the general trend you want to see. A stock market making new all-time record highs with fewer advances versus decliners. Very, very bad. Add to that, this is kind of like the yield curve, except I use 2s versus 10s, but this is just another view. Breaking the 30-year Treasury yield has surpassed the Fed funds rate for the first time since Q4 of 2022. This comes as 30-year Treasury yield has risen 60 basis points over the last 6 months. At the same time, the Fed has cut rates 2 times, from 5.5 basis points to 4.35%. In previous economic cycles, whenever the yield curve has turned positive, a recession in the U.S. occurred within months. Now, 2s versus 10s uninverted in late August, early September. So we're well into the uninversion process. Now we're looking at the 30-year versus the Fed funds rate, which I really never look at. However, this indicator can be proven wrong for the first time in history. The Heath hedging is, I hate that. If a soft landing is achieved, soft landing. So another look at the yield curve. This is not bullish. This is bearish. Now, for some bullish stuff, we don't want to be all pessimistic here. S&P 500 is reporting year-over-year revenue growth of 5.5% for Q3, which is above the estimate of 4.7%. Good stuff. From FactSet, 61% of S&P 500 companies have beaten revenue estimates to date for Q3, which is below the 5-year average of 69% and below the 10-year average of 64%. Revenues equals sales. They're trending lower than historical averages, not where you want to be. When the equity markets are at all-time highs, very, very expensive, you have yields moving up higher, and yield curves all over the place, uninverting as well. Now you have this moron in the White House that's given the green light for, let's call it what it is, NATO, to launch missiles deep in the heart of Russia. It's insanity. Now, here's a bit of good news. I didn't even know they had a meeting, to be honest with you. In their final meeting, Xi tells Biden he is ready to work with Trump administration. Now, a lot of people are thinking that they're thinking the worst, and they should. They should think the worst about tariffs. Now, I've said this over the past couple of live streams. Sure. Might there be more tariffs? I think so. Yes. Must they go on? No, not if we're going to get a good trade deal. If we get a good trade deal, then there's no need for tariffs. So Xi is not stupid. He's got enough problems. He doesn't want any more tariffs. So what's he likely to do? I don't think he's going to wait for Trump to say, hey, I'm going to throw sanctions on you. I think he wants to cut a deal right here, right now, on the eve of President Trump entering into office. Now, where might that come from? Who will suffer? Look no further than the EU. There's a perfect storm brewing for the EU. The EU is the biggest supplier for transportation equipment, motor vehicles, aircraft, rail, and ships to China in 2023. If China pivots to buying more of this stuff from the U.S. in an attempt to appease Trump, the EU will suffer. What do you want to buy? Boeing stock. I think that what you're seeing right now is a sell-off on Boeing, yes, because of the impact of the cuts at the Defense Department. They're not going to be buying aircraft carriers. They will still probably be buying aircraft. They're not going to stop buying aircraft. So I think that's overblown with Boeing. Now, if Airbus doesn't get as much business now because Boeing's going to get the business to avoid tariffs, China will buy from Boeing, and that'll drive the share price of Boeing up higher, which is why I'm very, very bullish on Boeing stock, because I think that's exactly what's going to happen. They are going to be the primary beneficiary of the buying from the United States and the takeaway of business from the EU. Boeing. I'm not saying it's going to go skyrocketing up tomorrow, but I think that by this time next year, Boeing stock is probably going to be up 30% from where it is right now. And I put my money where my mouth is. It's one of my biggest positions. And I didn't buy it high. I've been nibbling on it at the lows. Once I started seeing it stop going down on bad news and I saw new management come in, I wanted to buy the stock before they settled the union strike, because I knew the union strike might be a catalyst to the upside. It didn't happen because the election occurred, so that really muted the reaction to the stock. But I think that right now you're seeing a sell-off, probably a liquidity hunt for Boeing shares, and then you're going to see it just rip up higher in the coming months. This is not interesting. So you're going to have, this is interesting. So you'll notice that one of the sectors that did well last week were the banks. One of the only few sectors that closed up on the week, the banks. Why? It's because M&A is coming back. And if you take a look at this chart here, the net U.S. equity supply is down $473 billion year to date. That's just a year to date, less than a year, marking the third consecutive year of decline. Over the last 3 years, equity supply has shrunk by a massive $1.8 trillion. This comes as corporations have been conducting record levels of stock buybacks. As such, share repurchases have materially outpaced new supply, such as IPOs. When was the last time you heard of an IPO? You haven't heard of a real big IPO in a long time. I know SpaceX is going to be coming public. That's probably not going to be until after the first of the year. In 2024 alone, U.S. stock buybacks are on track to exceed $1.1 trillion for the first time in history. Corporations have never been more bullish on their own stocks. Call that a contrarian indicator. Now, this is why everybody should be bullish. These regulations, over 180,000 pages in code and federal regulations in 1 year. Every year, this gets worse. What happens to business in this country when this starts going in the opposite direction, down? So I'm quite bullish longer term. Short term, I'm very, very concerned about the equity markets. So the bias is at current to the short side. Let's do some chart requests before I lose my voice. What do we have here? I got to do a refresh. Polish Taco, EDC, that's emerging markets. Tim, not a lot of requests today. Okay, let's do it. What time is it anyway? It's getting late. Yeah, that works. Perfect. XBI. Ugh. I was so bullish. This time last week, I was so bullish. I think it was Trader Isaac that had this as a request. And I agreed. I thought it was going up. Look at the week prior, it broke out. Last week, just absolutely annihilated. So do I think it's going to rally this week? Yes, I do. I think it's going to rally all the way back up here to around 99.40. And then you got to sell it. You got to get rid of it. I would. I can't tell you what to do. I'm not your financial advisor, but I would get the heck out of Dodge, because I think this sector is in a lot of trouble. This is one bearish candlestick, and look at the volume. So this is an outside reversal bar, a bearish engulfing. Call it cupcakes, call it what you will. It is bad, bad, bad. They're going to bid it back up this week, but I would be selling it into resistance, avoid like the plague. Now, if they manage to close it back above 104, 105, then I'm a bull again. I'm an opportunist. I'm a capitalist. Daily chart, they're going to pop this. But I think it's got to be faded. Square. Broke out last week. A little bit of topping action. I'm bullish on it. I think it's got to retrace back down to either A, $82 per share, or for an extreme pullback, 78. Let's call it 79 bucks a share. Round it up. But I think it's breaking out. You have a nice Bollinger Band squeeze, which is firing off now. Doesn't mean that you're not going to get your sell-offs. And what I mean by Bollinger Band squeeze, you have the Bollinger Bands in red, trading inside the Keltner channels, bullish. Daily view, looks like a bull flag setup here. Call it a pennant formation, call it what you will. It's going up higher. Bullish on Square. EDC. That is for Polish Taco. Weekly view. If the dollar's up, you want to avoid this sector. I think that there are going to be great opportunities here for emerging markets. I don't prefer EDC. I prefer a non-China exposure. This has got 30% China. I don't like China. I don't like communists. I don't like the lack of transparency over there. I'm a big bear on them. I always have been. Especially after 2020, they sliced their own throat. So I think that we can get a rally back to the support level at around 34.50 per share. I'd be a seller. Now, if the dollar breaks, if it starts to break down, different story. Then I think that you can get a rally in emerging markets. But if the dollar continues up higher, major problem for emerging markets. It's like a tax on emerging markets. So you want to avoid emerging markets with a stronger U.S. dollar. U.S. dollar breaks, buy emerging markets. Let me make sure I didn't miss out on anybody. That looks like it's it. Folks, thanks for being here. I want everybody to have an awesome. Let's go to comments. Michael Anthony, Bitcoin could Powell's statements and data. God darn it. Could Powell's statements and data in the last week and last month be a correction for Bitcoin? Should take place and profiting down to 75,000. I'm not quite sure of the question there. I think I just got more requests. Trader Isaac. Folks, if you're not part of our community, you really ought to join. Trader Isaac just posted this. Here, I'll throw a link in there. If you want requests, you got to be part of the community. I owe it to them to I'll post the link in there. Join up. It's free. No credit card required. He will throw a little bit of I'll throw you some funny emojis, and that'll excite you. There you go. Join. All right, Trader Isaac. My top chart to start the week, VST. Nice pullback to the 10-period EMA. He's using the volume by price indicator. I happen to like it a lot myself. VST, that's the, isn't that the satellite company? VST, let's bring it up. Start with a monthly view. Great chart. Great chart. Let's go to the weekly view. I think this is a buy down here, 131 per share. I think you're going to get it. There's a lot of volatility out there in the equity markets. I think ultimately they're going to want to retest that support level. I'd be a buyer at that mark. Daily view. We're in a trading range. I still think they can hit this support level here between 131 and 134 per share. I'd be a buyer there. Tight stops right below that, but I don't think it's going to be necessary. And add more on a breakout, especially if we break out to new all-time highs. Clear blue skies on a close above 150 per share. Bullish. All right, folks, that's it. Have a profitable trading week. Thanks for being here. Like, subscribe. You know the deal. Don't forget about TrendSpider. They have that 71% discount. Expires tonight. So take advantage of that. I give it away free to our silver and gold level members. We are shorting AppLovin. If you want to join in that trade and how we plan on managing it, sign up. 14-day free trial offer. Use the links below. Have a profitable trading week. I'll talk to you soon. Be well.